We get so many great questions here at Question Time that sometimes it's tough to decide which one we're going to throw at Joe Calhoun. So, Steve, what question have you picked out today?
Yeah, I think a pretty good one. Why are we seeing these wild swings in stocks at the same time we have a quote unquote low volatility market? That seems impossible. What's going on there, Joe?
Well, it's not impossible, in fact, because it's happening. I wrote about this a couple of weeks ago, and this was really just based on my personal observation, because I've been doing this stuff for 30 years, which is that I've never seen so many big moves in individual stocks based on essentially nothing. Now, sometimes it's something, sometimes it's not. But earnings, for instance, earnings reports, we have seen. If you talk to FactSet says, oh, well, yeah, the volatility or the movement of a stock that misses their earnings estimate or beats the earnings estimate is a little, it's pretty normal. But, our personal experience is a little bit different. We look at a company like Hewlett Packard that reported last week. Stock was up 15% in a day. Same time, you had CRM, which is Salesforce, the software company, was down 20% in a day. And frankly, I don't think there was, there was somewhat of a difference, obviously, in the perception of the earnings, but those types of moves, they're huge. 15-20% moves in one day. Even more interesting to me is where we had one a couple of weeks ago, GE Vernova, which is the electrical spinoff from the electrical equipment spinoff from GE. The stock was up 15% in a day because some brokerage firm upgraded the stock to buy. Well, I didn't even know who the brokerage firm was. It doesn't matter. But, just because some analyst said, oh, it's time to buy it, now it's up 15% in a day. Well, what that is, and what's happening is a lot of times you're getting these offsetting moves. So you had the one about Hewlett Packard and Salesforce. They're both technology, but one up, one down. Even more similar, we had American Eagle Outfitters, AEO, which is a retailer, down, I think, 10% on the day its earnings came out. And I thought the earnings were actually pretty good. And the stock has done well. The company's done well. Very conservatively run, great balance sheet and so forth. But the stock is down like 10% on really nothing. Just kind of a slightly negative tone in the conference call. Maybe I don't know. It just was nothing. At the same time, you get Gap Stores, which is a turnaround situation that we happen to own. It's up 30% in a day. Two retailers, both basically in the same market, one down, one up. And it's not the fact that you have different results. It's the fact that you have such big moves based on those results. So there was really not that much news in either one of those things. Certainly not enough to move a stock 30%. Think about that. So what do we call that? Well, I said it feels like I've never seen anything like this before. And it turns out there's an index called the Dispersion Index, which tells you that I'm right, as usual. No, we won't say that. Dispersion, that's what's happening, though, is what we're seeing is a lot of volatility in individual names, but they offset each other. So when you look at it at the index level, the index looks like it's very calm, and it really kind of is. And that has to do with those few stocks that are performing really well and holding up the index. And it also has to do with this volatility offsetting. So it's a strange market, something I've never really seen before, but it's certain. And this Dispersion Index, if you look at the Dispersion Index versus the VIX, the volatility index, it's at basically an all-time high. And so that's what we're seeing. It's a difficult market to navigate because of that. But that's what we have to try to do. The other way to look at it, by the way, is that it provides us with opportunity, because if you're getting that kind of big idiosyncratic moves based on one company, what's going on at one company, you have the opportunity to be in the right ones at the right time. You can make a lot of money quickly, and you can add some alpha to your portfolio. Now, in our case, we actually had several situations. We owned Salesforce, and we owned Hewlett Packard, and we owned American Eagle, and we owned Gap Stores. We still came out ahead, thank goodness. But it wasn't as much as we didn't do as well as we wanted to because of the two down ones. But we had some other ones where we were on the upside, and it worked in our favor. So it's just a matter of, it does provide you with that opportunity to add alpha in individual securities, and that's what we're trying to do.
Any idea where this is coming from? What's driving this really high level of dispersion? This low market vol, but big moves in individual stocks?
Well, volatility is the inverse of liquidity. So we know, in a sense, that we're seeing there's not enough liquidity to absorb the activity that happens. So it doesn't necessarily mean there's a lack of liquidity in the whole market, because I don't think there is. But in individual names, there does seem to be this lack of liquidity. Maybe that's part of indexing. A lot of people index today. They're not buying individual securities, so maybe that's part of it. But I don't really know. But I will say, I think that I guess the thing that's different today than it was when I was earlier in my career is communications. Everybody gets the same information at the same time, and they all try to act on it at the same time. There's not enough liquidity in these individual names to handle it. So when you get some kind of good news, everybody latches onto whatever little bit of good news it is, and everybody tries to pile in the stock at the same time. Same thing with bad news. It can be very minor bad news, and it doesn't matter. Everybody tries to get out at the same time, and you see these big moves. I don't know any way to fix that, because you have to have people able to respond, and you're not going to change the communications infrastructure that we've built. So I don't know. You just got to live with it, I suppose.
Be sure to send us your questions you'd like Joe to answer. Put them in the comment sections down below.